Bitcoin has been described as everything we don't know about computers, combined with everything that we don't know about money. And as for gold, well, no need to explain there. You presumably have seen it or at least touched it with your hands. Today's ETF battle is between the biggest gold ETF by assets and trading volume going up against the biggest Bitcoin ETF by assets and trading volume. It's King Kong versus Godzilla. Are you ready? I am. Stick around. I'm Ron DeLegge. Welcome to ETF Battles. And if it's your first time watching, welcome to the party. And don't forget to hit that subscribe button and like button if you've been enjoying our content. Now, if there's an ETF battle, contest, or matchup that you'd like to see, send me your ETF tickers in the comment section below or on our X feed at ETF Guide. Also, be sure to watch our other originals on this channel that I produce, like Shifting Energy, along with First Look ETF with the New York Stock Exchange, along with the others. The description section below this video has links to viewer resources, along with links to our judges, as well as our program sponsor direction, so don't miss it. Now, today's contest is between the biggest Bitcoin ETF going up against the biggest physical gold ETF. It's IBIT from BlackRock and GLD from SPDR Global Advisors. Bitcoin's been called digital gold, and it's one of the fastest assets to ever top a $1 trillion market cap. Physical gold is making some noise as of late. It's touching near all-time highs, and it also has a very strong following. So judging today's heavyweight bout is Dave Kreinces with ETF PM and David Dierking with TheStreet.com. Judges, welcome to the show.
Hey, guys. Great to see you again.
Hey, Ron, David. It's battle time.
Yeah, our four battle categories are cost, exposure, strategy, performance, and then mystery. For the mystery category, that's where you, our judges, can choose any factor or thing that you think is crucial to today's contest. Our judges can also nominate wildcard ETFs if they feel there's better choices elsewhere, or they can offer split decisions. I've got the scorekeeping duties, and at the end of the program, we will declare an overall winner. Now, keep in mind, none of the battle outcomes are ever predetermined or known in advance by myself or our judges. Let's kick things off with the first category, cost. Dave Kreinces, please get us started.
Ron, it's always great to be with you guys, especially when we're talking about King Bitcoin. You know, both of these battle funds are low cost, although for gold exposure, we do prefer wildcard ETF symbol IAU. IBIT is lower cost than even IAU, and Bitcoin is a far more important asset to include in your core diversification. So I give the win on cost to Bitcoin through IBIT.
Thank you. You're up next, David Dierking, with your analysis on cost. Give it to us.
Yeah, between these two funds, I see it the same way. IBIT at 12 basis points is going to be the clear leader here compared to 40 basis points for GLD. In gold ETFs, I also prefer the wild card, but it's GLDM, which is the mini trust version of GLD. That has an expense ratio of just 10 basis points. So I'm actually going to give the win to GLDM in this category, but they're both very low cost and both great options for exposure in these categories.
That takes us to the exposure strategy, and you already alluded to it, David Dierking. So give us your analysis on that.
Well, I mean, this is about as straightforward as it gets. It's gold versus Bitcoin. So in that sense, they both provide very liquid, low-cost coverage of those categories. The one thing I will mention is on the Bitcoin side, the spot Bitcoin ETFs versus the Bitcoin futures ETFs. Now that we've got funds like IBIT, I don't think there's really much of a case for the Bitcoin futures ETFs like BITO. Those are still attracting some assets, and they're still actually getting some flows to them. But I think those are going to ultimately be a remnant of the pre-spot Bitcoin days. So I'd say definitely stick with spot Bitcoin and spot gold in these instances. But from a pure exposure strategy, it's a split decision.
Dave Kreinces, you're next. Give us your analysis on exposure strategy. How do you see it?
For exposure, IBIT is a leading ETF solution for Bitcoin in a traditional investment account or retirement account. And our wildcard ETF IAU gives you efficient exposure to gold. Overall, we believe that Bitcoin is a critical asset for everyone to own, especially for a well-diversified long-term investment portfolio, and even more important than stocks in certain respects, while exposure to gold is far less important. So that means I emphatically give the exposure win to Bitcoin and IBIT.
That takes us next to performance. Dave Kreinces, you're up. Give us your take on performance. Which of these two ETFs stands out?
So performance is what really matters. And while nothing has kept up with NVIDIA's 323x gain this past decade, Bitcoin's performance is off the charts by miles as well. The world has never seen an asset like this before. Bitcoin is by far the world record holder for speed to a 1 trillion market cap, getting there in just 12 years. And Bitcoin was extremely difficult for most people to purchase until this year. Now, Bitcoin ETF IBIT has 23 billion in assets in record time, but it just launched early this year. So looking at Bitcoin Trust, GBTC, over the past decade, this data chart shows that GBTC delivered 128 times your money. Gold delivered a little over 1 times your money. Over the past 3 years, gold strongly outperformed, and over the past 1 year, Bitcoin was the winner. This highlights how a 3-year or a 1-year data point often confuses investors. It also means that volatility and correlation of Bitcoin will be far less attractive than gold at times, such as in 2022, but we still believe Bitcoin could be the world's best store of value long term. So I give the performance win to Bitcoin and IBIT.
And it should be noted that the GBTC fund that you mentioned just this year converted to a spot Bitcoin exposure strategy. Before that, it was not using a spot Bitcoin ETF strategy. So just that note that is, I think, important to mention. Thank you very much, Dave Kreinces. Dave Dierking, you're up next. How do you see it in terms of performance?
Yeah, in terms of absolute performance, there's no question that Bitcoin is the winner here. It's, the other Dave alluded to the numbers. I mean, it's just been up by a factor of, 200 or something since its inception. Gold has made nice gains, especially this year. It's doing very well. But even year to date, Bitcoin is pretty much doubling up on the performance. So in either case, I think these are long-term holdings. These are things you just want to stick in your portfolio and ride out the volatility. IBIT's portfolio volatility to this point has been about 4 times that of gold. So, I mean, risk-adjusted returns may be a consideration, but from a pure historical performance perspective, no question that IBIT's the winner.
Well, that takes us next to our mystery battle category, and this is where our judges can give us that surprise factor or thing that they think is crucial to today's contest. So, David Dierking, give us your mystery battle category. What is it, and which of these two ETFs wins it?
Yeah, my mystery category is going to be risk management, and I view both of these asset classes as necessary inclusions to a broader portfolio, not necessarily because of their return potential, but for their potential for risk reduction within a broader portfolio. If you look historically, gold has about nearly a zero correlation with stocks, which means that's just an asset that's going to do its own thing. Now, could it prevent you from a deeper drawdown in your portfolio? It might not. Would it be at a good inflation hedge? It might not. But the one thing that it does really well is hedge against overall risk and bring overall risk down. So I think in that sense, gold makes a great portfolio risk management tool. Bitcoin, maybe a little less so just because it's so volatile, but because it has such a different correlation as well to stocks and bonds and real estate, it's a good addition as well. Maybe not quite the risk management benefits just because of its volatility. So with that being said, I'm going to go with GLD or GLDM as the winner in this category. I think it just does a better job of helping risk manage an overall portfolio.
All right. We appreciate that analysis. Dave Kreinces, you're up next. How do you see it when it comes to your mystery battle category? What is it, and which of these two ETFs wins it?
Ron, it's no mystery that position size is a critical decision for all of your investments, and perhaps the most important portfolio decision for passive investors. may be to own 1% or more exposure to Bitcoin as quickly as possible and to hold it long term. At ETF PM, we believe Bitcoin may prove to be a financial lifesaver for many investors. As for gold, it certainly has potential to outperform stocks and Bitcoin at times, but I strongly expect Bitcoin to massively outperform gold over the decades ahead. That said, given the extreme volatility in Bitcoin, many investors could handle a larger allocation to gold. So for position size, I call it a split decision.
Well, now we move to the part of this show where our judges could give us their overall battle winner. So Dave Kreinces, give it to us.
Well, to recap this critical Bitcoin update, King Bitcoin is still king. Gold has been making new highs, though it is a far less critical asset to own, in my opinion. And while we are even more bullish on Ethereum long term, Bitcoin has been outperforming recently. Now, financial literacy is critical for everyone, especially now that artificial intelligence is expected to ravage the job market for human labor. Bitcoin may prove to be a financial lifesaver for the masses, so I often tell young people to buy their Bitcoin immediately. In fact, we believe universal basic investment is an important part of the solution for universal basic income. At ETF PM, we actually give $500 investable benchmark grants annually to hardworking young people so they can buy some Bitcoin fast and learn this critical lesson. Here's a picture of our pizza guy who received a grant from ETF PM along with our book, Investable Benchmarks, so he could buy Bitcoin, Ethereum, and TQQQ right away. And we do this because we believe a minimum 1% portfolio allocation to Bitcoin is critical, and every young person should own a minimum of $200 worth of Bitcoin fast. At ETF PM, we do currently have passive and active positions in a wide range of Bitcoin instruments, including IBIT. So I give this battle win to Bitcoin and IBIT.
David Dierking, your final chance to weigh in with your overall battle winner. Give it to us.
Yeah, I'm going to give you kind of a cop-out answer, and I'm just going to call this one a split decision. But I do that with good intentions because I think both GLD or my personal preference, GLDM for the lower cost, or IBIT are great ways to gain cheap exposure to these asset classes. The ability to buy spot Bitcoin now has been a great addition to the financial markets, better than Bitcoin futures ETFs, so I'm happy to see that there. And then just easy access to physical assets like gold is a great thing. So GLD/GLDM and IBIT, both great options for investors. So I'll give the win to both of them.
Well, our judges have spoken, and according to my battle scorecard, we've got a split decision between IBIT, which was Dave Kreinces' choice, and GLD and GLDM, which was David Dierking's choice. And I think our judges raised some great points. Of course, Bitcoin, a very volatile asset, although it's had tremendous historical performance. The future remains unknown, but nevertheless, if it's able to even come close to what it's done in the past, it should be pretty amazing for most investors. And Dave Kreinces recommending and saying, hey, listen, just even maybe a 1% exposure just to get started as a way of easing into that particular area. And then David Dierking mentioning GLDM as his wildcard choice, lower cost expense ratio, and a excellent way to get exposure to spot gold. And of course, GLD along with that. But again, both of these assets have similar characteristics in that they're stores of wealth. They also have no earnings and have no dividend yield. So really the way you make money is by asset appreciation. And so great job to both of our judges breaking it down for us on today's ETF battle. We couldn't have done it without you.
Thanks for having us.
Thank you, Ron. Thanks, Dave.
If you've got a certain ETF battle you'd like to see, hit me up in the comment section below. Post your ETF ticker symbols along with which matchups you want to see. Also, if you see someone else recommend an ETF battle that makes sense or something that you'd like to see, just hit the like button and that'll tell us what you want to see. One last thing is be sure to check our Season 5 playlist of ETF battles just to make sure that you're not recommending any ETF battles that we may have already done this particular season. Well, that does it for today's episode of ETF Battles. Thanks for watching, and be sure again to hit our playlist, binge watch all of our episodes, and we'll see you on the next show.